Good afternoon and good morning to the many people who have joined us for this year's Santander International Banking Conference, and welcome. My name is Alejandra Kindelan. I am the Head of Research and Economic and Public Policy for Banco Santander. For the past 13 years, Santander has brought together bankers, academics, authorities, politicians, and other stakeholders for an open dialogue on the role of banks in economy and society. This conversation has generated thoughts and ideas that have made their way through to Santander's vision and priorities, and I hope also to those of our guests. And this dialogue becomes even more important with the challenges that we face today: the pandemic, political uncertainty, economic crisis, climate change, as well as opportunities like rapid digitalization. This is the first year that we are doing the conference virtually. This format, which is of course a response to the pandemic, has actually also opened up new opportunities for us. It gives us flexibility, so rather than concentrate the conference in one single day, we are spreading it over 5 weeks in sessions like this one. And we will cover different topics such as digital opportunities and challenges, climate change, the transatlantic relationship, and the role of responsibilities of the public and private sector in a post-COVID economy. I hope you can join all of these sessions too. The virtual format also enables us to invite more of you. Actually, 2,300 people have registered as of today, and allows us to attend and allows people to attend from afar. And we're really excited about this. And I can't remember a year when we have had more and better qualified and more interesting speakers. And welcome to you all today. I think the only thing that we have missing today is a woman on the panel we are about to see, but we will make up for that because we will have many women over the subsequent sessions, including our chair, Agustín, who will make the final session on November 5th with our finance minister, Nadia Calviño. You have some features in the screen that I hope you use, because you should be following us through the conference app and webpage. On the right-hand side of the screen, you should see a window with which you can send questions, and our moderator, James Harding, will share those with the panelists. And in the left, you also have other features, including a list of attendees today. So I hope you can use all of these. Once again, thank you for attending the conference. And now I hand it over to James Harding, our moderator. Thank you, James, and thank you all.
Alejandra, thank you, and thank you everyone for joining us. As you say, we've done this Santander International Banking Conference for a few years now, and I've been lucky to be part of it. But we've never had the chance to bring together quite so many people from quite so many places at, I'd argue, quite such a critical and pivotal time. And so we're really fortunate today that we are joined by José Antonio Álvarez, you know him, the Chief Executive of Santander, by Professor Larry Summers. Again, everyone will know you, Larry, very well. Hello and welcome. As well as being a professor, of course, a very distinguished career in government and a one-man engine room for intellectual policy, both in economics and in politics. We're delighted too that Agustín Carstens, who many will know from his days as the Central Bank of Mexico and more recently the General Manager of the Bank. And I see too that your Kukies has just joined us. Mr. Kukies, it was great to see you again, the State Secretary, as people will also know, at the Federal Ministry of Finance in Germany, a particularly muscular panel, and so we have a good deal to learn from you all. José Antonio, I'm going to start with you if I might. Just give us, if you would, the context of this particular series of conversations that we begin today.
Thank you, James. Thank you, Alejandra, and good afternoon to everyone. Good morning to you, Professor Summers. First, let me thank all of you that have registered into this conference. When I was coming here, I was thinking in the first time we held this conference, that was a year that has is in our memories, was October 2008, just a couple of weeks after Lehman Brothers went under. Yeah, so since that, we've been discussing different topics along the years. The first topics in the very first year, the topics were more about regulation, what to do in order to avoid any potential future crisis in the banking sector. This was the first couple of years. Afterwards, we start to talk more about the role of the banks in the society and how the banks should behave, and the purpose of the bank in the society and the way they behave in relation with the customers, with other shareholders, employees, and all these things. Yeah? So we've been going through this journey, and well, now here we are, 13 years later, and in the middle of a crisis again. Yeah, so crisis is, well, probably is part of the life. Yeah, so although we were not expecting this crisis, at least we were not expecting this crisis from the financial sector. The financial sector is not this time, fortunately, at the origin of this crisis, although we think that the banks have a significant role to play, and they already play a significant role in the last 6 months, channeling the different initiatives from the central bank and the governments in order to keep the economy going and to restore as soon as we can the economy back on track. Now, it's better to hear our guests, my colleagues in the panel, that is probably some of the best qualified people in the world to talk about this. And I want to thank also Secretary of State, Mr. Kukies, Professor Summers, Agustín Carstens, Managing Director Agustín Carstens, for joining us today. Thank you. Back to you, James.
So, José Antonio, just to give everyone a sense of what we're trying to do today, is we're beginning a series of conversations. We try to understand the future of the crisis we face. And in particular today, I think we're trying to think through government, central banks, and banks. And so, José Antonio, if I may, I'm going to come back once we talked a little bit about government and central banks to talk about, obviously, Santander, but the bank and financial sector broadly. Professor Summers, I'm going to start with you if I can, and I know that we're physically distant, but we're also more informal, so I might flip between Professor Summers and Larry. It's a little familiar, but I hope that's allowed in the new age.
More Larry.
Right.
Will be ideal, as long as you don't descend to Bozo. I'll be very happy.
Well, descent to Bozo is a whole other conversation for another time. But Larry, let's start there. Let's start with where we are. What do you think are the policy priorities that are being missed, both on the health front and on the economic front, by the US government and governments more generally?
I'll answer with the US primarily in mind. I think we have made a complete hash of masking, of culture norming around healthy habits, and around testing and contact tracing. And so we have left ourselves with a tragic trade-off between shutting down society, which is terribly costly in many, many ways, and opening up society with catastrophic COVID consequences. And that we have failed across the board. And of course, the things go together. It's much easier if everybody's wearing masks when they should to have a low level, and with a low level, to make testing and contact tracing work than it is to make testing and contact tracing work when you got it at a high level. But it has been an abject failure that raises questions about the efficacy of our political institutions, but more deeply about the cohesion of our society. And that has been the most egregious failure. Second, we are in danger of making the mistake that governments usually make after economic downturns, which is a premature declaration of victory upon the knowledge that things are coming off the floor. This is a old phenomenon. It happened any number of times in Japan when there were premature increases from the zero interest rate or impositions of value-added taxes. It was the major policy error in the United States, and I would argue in the global economy more broadly, in the wake of the 2008 crisis. And doing what we have done in terms of giving up on further fiscal stimulus right now in the United States is the equivalent of living in California and choosing this moment to toss away your fire insurance policy. It is the principal double dip insurance that we have available to us. So the second lesson is that we need to keep the pressure on. And the third lesson is we need to take the lesson that this is pointing up about inequalities within our society. I cannot understand what it is that could cause bailing out airlines with their shareholders not taking responsibility, their debt holders being paid back in full on huge credit spread debt. How that could be a central priority in Washington, but providing assistance to state and local governments in communities where municipal hospitals are being forced to lay off nurses is not a priority, is not something that I can understand. So priorities that focus on the fair, making sure we're providing the necessary fiscal support and doing the right things to contain the virus as best we can are, I think, the three policy priorities that I would highlight.
And can we talk about each of those just in a bit more detail, starting with the policies that are needed to suppress or contain the virus as is? What's your read on government spending on health interventions versus economic interventions?
So I think the two questions. So before we get to spending, look, the power of examples and of what leaders model is immensely important. It's been noticed many times that when TV characters go to the public library, all of a sudden more kids go to the public library. This kind of thing matters. And we have a president of the United States who's doing it exactly wrong, making virtually every bad signal that it's possible to spend. I think there's a serious argument that for ordinary times about the relative allocation of resources in the United States to healthcare and to educating 3-year-olds. I think there's a reasonable debate to be had about decent housing versus extension of life at the end of life. Those are important debates to be had. When COVID is costing the US economy $3 billion a day and the global economy $10 billion a day, and accelerating a solution by even 1 week is $20 billion for the United States and $75 billion for the global economy. There is not a serious question about the merits of investing more in testing. There is not a serious debate to be had about investing more in vaccine production. It is beyond belief that in the wealthiest country in the world's superpower, that there was the spectacle of masks being airlifted from China, and that there is a single person lacking for a decent mask for lack of resources. And so there's a debate for another day about health spending versus other spending. The need to be investing more in COVID containment and control, I think, is not arguable at this point in the United States. And my suspicion is that the same would be true in many parts of Europe.
I wanted to ask about the health policy priorities, not least because I know many people are aware that you have to deal with the health issue before you can come to the economic one. But I think the focus of our conversation today really is much more around the economy and the finance system. I'm going to come in a moment to Agustín Carstens and talk a bit about central banks, but I wanted to pick up on your fiscal point. And for a lot of us who sit there, we are just bewildered by the scale of borrowing and what that means for the future, and how a world that takes on more debt, whether it's as countries or companies or even individuals, is going to make their way through this. Can you plot for us a little how you think people should be looking at the future, 6 to 18 months, of dealing with a world with much more debt?
Let me make these 3 points. First, I don't think there's much of anyone anywhere in the United States who's not spending because the cost of capital is too high. When the long-term interest rate is 70 basis points, that is not the problem. The fundamental way in which monetary policy operates is reducing the cost of capital. And that's why, while monetary policy can stop financial panics, and that is a vitally important role, I do not believe that monetary policy is a potent forward-looking engine for economies right now. And it has to, in some way, have a fiscal element, whether it's credit support or direct payments of some kind. Second, the private sector is in massive surplus. The private sector is in massive surplus because everybody can't spend or is scared to spend given the uncertainties, and there is not much desire to invest given all of the uncertainties and given how much excess capacity there is. What Keynes fundamentally taught us is that when there is an excess of private saving, there is a need for that saving to be absorbed. If you think on a global basis, the only place a private surplus can be absorbed is by a public deficit. And so we need to understand a public deficit as in substantial part emerging out of private surpluses. To the extent that they are emerging out of private surpluses, they are obviously much less serious than if they are requiring the private sector to rearrange itself in order to fund some kind of government profligacy.
Right.
The economic evidence that this is the right way to think about it comes from looking at interest burdens of debt service. Anyone who buys a house knows that you don't think about your house and what house you can afford primarily in terms of the ratio of your mortgage to your income. You think of it primarily in terms of the value of your house to your wealth, or even more in terms of your debt service to your income.
Yeah.
Debt service in the West, in the industrial world, is unusually low by historical standards, way low by historical standards compared to what has been typical. And so I would argue that that's the context in which we need to understand large budget deficits. And that doesn't mean we can maintain the current level of deficit forever, but right now, the challenge is getting the economy moving and growing again.
Mhm.
And that requires absorbing the private saving. And if I could permit me one last observation, and then I'll stop talking. There is a tendency in so much of the discussion to confuse expansionary fiscal policy with larger government deficits or debt to GDP ratios. In three important respects, it's possible to have expansionary fiscal policy without a change in the deficit or the government's debt to GDP ratio. The first is if you tax and spend in equal measure through the balanced budget multiplier, all the spending will be spent, but some of the taxes will come from saving. The second is if you do things that promote fairness, the marginal propensity to spend of the people listening to this call is substantially greater than the marginal propensity to spend of the average person in the population. And the third is success in social insurance that reduces people's need to self-insure is a way of promoting spending. And by the way, it's important when people fulminate about wealth inequality. A society that successfully meets the needs of its average citizens for retirement, for sending their kids to higher education, for dealing with catastrophic illness, for financing their homes, is going to be a society in which you're not going to observe a lot of middle-class wealth because you've enabled them to spend their incomes and still feel secure. That's progress. That's not regress.
Larry, thank you. By the way, I don't want you to stop talking because I'd actually like to come back and hear more. I want to talk about that point about inequality you raised. I'd like to come back to you on the international picture and, of course, the US domestic political one. But it seems this is a good moment to turn to Mr. Carstens, to Agustín Carstens, not least because I'm interested, Agustín, on what you make of what Larry's saying about the fiscal levers to address this problem and where, directly speaking, you think that leaves the responsibility of central banks?
Well, thank you very much. Thank you for Santander for inviting me to this panel. It's always great to be with Larry in a panel. I always learn from him, from Jörg, of course, José Antonio. This has been an exciting year for central banks, not necessarily a planned year, but certainly central banks during this year, in the face of the COVID-19 pandemic and crisis, reacted promptly, swiftly, decisively, and I think they made a great contribution towards absorbing the tremendous shock of this pandemic. This was, I would say, a sudden stop in several regards, a sudden stop in economic activity, a sudden stop in financing, and actually a sudden stop in capital flows. And that generated immediately a very complex situation. And there the reaction of central banks was in two main areas. One is to help stabilize the macroeconomy of the different nations, and second, to stabilize markets. I think the first one is quite easily understood, and I think has been discussed and is well known about the use of monetary policy to start stabilizing the economies. What was of the essence in this case was to prevent this huge shock that is obviously a shock in the real sector, to generate a wide and generalized financial crisis. Mm-hmm. And I think in that sense, monetary policy was very, very efficient. Here, the timely response was of the essence, and I think central banks used a lot of their previous knowledge accumulated in other crises, in particular in the GFC, to respond swiftly and, as I said, massively. Obviously, the blanket support it provided was very, very important. A lot of actions were undertaken on the presumption that this shock was very severe but transitory. Now, this second assumption is more questioned, and therefore monetary policy at some point will have to be adjusted. But I think so far the response has been very, very opportune and effective. I think the second important role of central banks that played during this year is to stabilize markets. I think an aspect that central banks showed in the global financial crisis was to play the role of a market maker of last resort. Mm-hmm. And again, they had to play this role again, particularly in March. What we saw was a dislocation between supply and demand of liquid assets. Several key markets started to stutter. Markets were not clearing, there was huge volatility, and there was a risk of further contagion to other markets. Here, basically, what happened is that to some extent, the progress and the advance of non-bank financial intermediation in the global economy went ahead during the last 10 years, and the assumptions about the dependency of funding were not completely, I would say, guaranteed under this type of scenario. Therefore, central banks needed to come in and provide liquidity in the appropriate nodes in the global financial system to try to stabilize, for example, key markets as the treasury bond market, a market that traditionally is considered to be the safest market, the most liquid market, and of course, for the transmission of monetary policy, is of the essence to have a well-run, well-oiled treasury bond market. At the same time, there were some elements of runs against some form of financial intermediation, like money market funds, and that needed also to be taken care of. And there were some over-leveraged players also that, in a way, forced the intervention of authorities to prevent pro-cyclical reactions in markets. So I think in that respect, the intervention of central banks was very, very effective. And I think that as we move forward, some things that we need to really think about is how can we prevent, in particular, this second type of problems, especially to macroprudential aspects and microprudential regulation. In terms of a key discussion between fiscal and monetary policy coordination, in a very few lines, I fully agree with what Larry Summers just presented.
Can I just ask you though, Agustín, you mentioned in your opening comments there the GFC, the global financial crisis, and I just wondered how you're seeing the systemic pressures in the financial system, particularly as you look into 2021, when you see the possibility of whether it's country defaults or corporate defaults on debt and pressures from governments around growth, and what the expectations are of central banks in enabling the financial system to provide the funding to companies, countries, individuals that they need, and the extent to which the experience of the global financial crisis has made the financial sector cautious and put buffers in that potentially restrict the flow of money to those who need it.
Well, something that we have seen during this crisis is that the financial system has been quite resilient. Mm-hmm. Yes, we have a bout of volatility that could have gotten out of hand, but that situation was quelled very rapidly. What we have seen is that the banking system that traditionally is the one who can perpetuate and in a way can expand a crisis across sectors resisted quite well. As a matter of fact, as it has been said, the banking system this time is more part of the solution than the problem. We're counting on the banking system to continue to provide credit to the economy and to help, in a way, the private sector, the households, corporations, to deal with the declining activity. Of course, even we have been encouraging the commercial banks to use their buffers, and they have been prudent about it. I would say, by and large, the financial system is doing quite well. There are some aspects, I would say, more that we need to take care because in times of stress, some fault lines or some weaknesses have showed up. But needless to say, the fact that liquidity has been increased so amply by all advanced economies, central banks, and by many emerging market central banks have made that financial conditions are quite accommodative, and that has, in a way, preserved relative stability in the markets. Of course, it doesn't take away that down the road other issues might appear. Yes, we have the situation that the non-bank private sector, namely the corporate sector, has very high debt. But so far we haven't seen much issues, although as this crisis continues or this slowdown continues, it is likely that we will see more solvency issues down the road. And in terms of sovereigns, I think that we are at least talking about advanced economies and pretty much all or most emerging market economies. There has been a very clear differentiation in terms of the fiscal response. With very few exceptions, I would say all countries have tried to maximize the use of their fiscal capacity. In advanced economies, in some countries, the process has been, the fiscal impulse have been very, very important. And in terms of emerging markets, it has been, in most cases, aggressive, but relative to advanced economies, quite moderate. And that is more in line as a recognition of the capacity of indebtedness. I mean, the rates on emerging markets obviously are not as low as advanced economies, and the credit spreads certainly have not disappeared. But I think in terms, given the conditions and the perceptions of markets, I think the response has been adequate.
And Agustín, I'm going to come to Minister Kukies in a moment, but can I just pick up on your point about, some liquidity problems becoming insolvency problems at some point? Can you give us your view on the next 6 to 12 month outlook for the economy and the financial system?
Well, I mean, the initial shock was an issue of liquidity, just because there was a huge reallocation of financial resources towards safe assets. And given the liquidity mismatches and so on, some businesses and some households could have suffered because of lack of liquidity. And that's why the response of central banks, in coordination with the support of many federal governments in terms of credit guarantees and so on, has really at least established a bridge to better circumstances. Mm-hmm. But the reality that we have to recognize is that COVID-19 will change the economy.
Yes.
Many sectors that are suffering will not recover, just because we will have a different way of traveling, a different way of working, a different way of shopping, and in a way this has been compounded by the digital revolution. Of course, a lot of innovation in terms of e-commerce, for example, is coming to the forefront, and is combining itself with the slowdown in activity. So many retail shops will not make it again. No. Yeah. Therefore, I think that it's fair to think that, I think it's something we have to expect, and we should prepare. Yeah. That more bankruptcies will be seen in the future.
Right.
At this stage, the policy response, I think, has been adequate. As I mentioned at the beginning, the perception was that we were going to face a transitory crisis, but it has been more lasting. It will last more. Therefore, many governments, or most governments, have tried to avoid cliff effects. Many packages were going to be suspended around this time.
Mhm.
And most countries have the good judgment to prolong them. And I think that's good. I think it's good to transform cliffs into ramps.
Right.
But at some point, government action cannot prevent the increase in bankruptcies. I think the change in the economic environment will have to induce an inescapable reallocation of resources. And I think what the policy will have to rotate into, or to pivot into, is to facilitate this reallocation of resources.
Agustín, thank you. We'll come back, because as I said, I wanted to talk about the international picture and some of those issues, but I'm going to bring in your Kukies, if I might. Minister Kukies, many people will know that you also started life, or at least not started, had a period of your life in the financial sector as a banker as well. Tell us a little bit, if you would, about how you read things, just first in Germany, and the 6 to 12 month outlook on the German economy, particularly in the light of what Agustín Carstens was saying about the likelihood of more bankruptcies to come.
I definitely didn't start life as a banker before. Working as a banker, I actually studied macroeconomics, listening to Larry Summers, so that came before. No, but I think the general mood here is one of gradual recovery, because I do think we quite diligently studied the policy mistakes that were done post financial crisis and in the years following that. I think we've had a very good coherence over the past months between monetary and fiscal policy. I think everyone who followed the European discussion of asymmetric response with strong monetary impulse and lack of fiscal impulse saw that when the crisis hit, the European Union and its member states really responded. I think Germany was right out of the box with our bazooka plan in early March. We hit the ground running and developed a program of fiscal expenditures, short labor schemes, guarantee provision in massive volumes to our corporate sector through lending programs. And I think the European Union also did something that avoided the very asymmetric response in fiscal policy between those member states with fiscal capacity and those who don't have the massive fiscal capacity that maybe Germany has. I think at least analytically, I think one of the big mistakes of Europe after the financial crisis was this asymmetry of response, where exactly those countries that needed most fiscal response went into austerity mode, and those with fiscal capacity responded forcefully. I think we've done much better after initial resistance or initially being too slow. In early April, we already agreed a 550 billion program across the European Union, administered by the ESM, the EIB, and the EU Commission. We now, just yesterday, concluded in ECOFIN a 750 billion recovery and resilience facility that is going exactly majority to those countries where the COVID impact was the highest. So I think the fiscal response, we've tried to learn the lessons that economists teach us. And I think one other point I think that both Larry and Agustín made is the problem of no premature declaration of victory. Mm-hmm. The fact that we're now at this stage where already growth looks like it's at least not going any worse, and in some instances even recovering. We are implementing a new 750 billion program that will take effect next year, and that will gradually take effect in the course of next year. And the fact that even frugal Germany next year has a record expansionary fiscal spending program directed exactly in those two areas with a focus that Larry mentioned, namely support for municipalities that have a huge percentage of our public capex, to hospitals to make them better, but also to some future expenditure programs from green hydrogen to wind energy, to solar energy, to renewables, to digitization, to quantum computing. So, I think we're trying to avoid exactly what has been said, namely prematurely declaring victory, but rather we're going full force into 21 with a pretty substantial willingness to accept another year of significant deficits. And we have the capacity. I mean, we're good, right? I mean, markets are still giving us money at record negative rates. Our debt to GDP level in Germany is somewhere in the low to mid 70s, so significantly below the levels reached after the financial crisis.
I mean, Jörg, I must say that listening to you and Larry and Agustín, it's an amazing moment to hear people, or frankly, in your positions in different parts of the world, with such a commitment now around fiscal stimulus, given the experience that the world had and the way we were sort of reframed and reshaped by the financial crisis and our attitudes to debt. I suppose there's been a conversation that's gone alongside the balance of spending and borrowing for the decade, which has been about Europe and the structure of our financial system, and talk about whether or not we get to a closer banking union, closer capital markets union. I wonder whether or not you think that this experience in 2020 is going to have a meaningful impact that moves that beyond debate into something that changes markedly on the ground.
Yeah, I certainly hope so. I mean, yesterday we had a big debate around the European finance ministers. On the one side, we achieved a significant majority for a 750 billion spending program that, by the way, is going to be financed by European debt. So the debate around the European safe asset at least will come to a conclusion, in the sense that we will have up to 750 billion, hopefully AAA EU-issued sovereign debt that, to me, is the next best thing to a European safe asset that we have. And of course, the dynamic that installs into a growing debate around a closer fiscal union, I think, is a very healthy one. Of course, we'll have to do it in the right way. I mean, the verdict is still out how this money is actually going to be spent. And in good old European tradition, we delegate the power to decide that mainly to the European level. Of course, there's control mechanisms at the European level, but at the end of the day, the decisions on how the money is going to be spent is still at national level, and it'll be extremely important to spend that in growth-enhancing ways to increase the potential growth rate. I mean, Europe has had a potential growth rate substantially below the US for many, many decades, and we have to use this crisis to at least attempt to get closer to US potential growth rates. And how we spend the 750 billion will play a huge factor, whether it goes into growth enhancing or structure preserving expenditures.
Thank you, State Secretary. Thank you. What I'm going to do is I'm going to come to José Antonio, if I might, because José Antonio, it's interesting talking to people who are looking at things, if you like, in different ways from a policy perspective. You're a practitioner in the financial markets, and I just wondered whether you would do the same as I asked of Agustín, actually, is to give your view on how you see things rolling out in the next 6 to 12 months, in particular, for Santander, of course, but also for the banks more broadly.
So I would say, in general, I share the Agustín views about the management of the crisis by the central banks and the governments. Yeah? So I think this time the reaction was a quick reaction. Central banks, as Agustín rightly said, providing liquidity and being the market maker of the last resort. And they stabilized the markets very quickly in March, at the end of March, in the very first days of the pandemic, they stabilized the markets. Second, the governments step in with a expansionary fiscal policy, trying to protect incomes, of individuals. You have different schemes in different countries, but at the end, the governments are pumping money into to protect the incomes of the individuals. That is the right thing to do in a crisis like this one. I agree with Mr. Kukies and Larry on this regard. And second, they provide guarantees for the lending, for the weakest credits in the corporate sector. The governments provide guarantees for the banks to be able to keep channeling liquidity and lending into the companies. Yeah, we went through all this process, and when I remember the crisis, I do remember a period in March, April, where we were lending, the lending to corporates and SMEs, but more SMEs, at the beginning more large corporates, afterwards more SMEs, and the government schemes was growing a lot and grew a lot as a result of these schemes. With individuals, the relationship was established in a different situation. Yeah, and basically what happened there with individuals, being mandatory by some governments on a voluntary basis done by banks, we we produce thousands of extensions and payment holidays for individuals. In the case of Santander, the figure is, just you to give an idea, only Santander is 125 billion of payment holidays, of loans on the payment holidays for individuals as a result of the crisis. So we keep the economy going with the help of the governments in providing guarantees to the SMEs, and on our own or with some help from the government on the individual side. So this was the first 2 or 3 months of the crisis. After that, we are living in a situation in which we are seeing what Larry mentioned at the private sector being a surplus. This translates into a significant increase. The deposits keep growing at a significant pace month after month because the private sector surplus. At the same time, the credit demand is pretty weak at the moment. Yeah, it's true that you can always find here and there some sweet spots, like we've seen for example, in the auto lending, just because private transportation, as a result of the pandemic, has become more popular than it was before, and public transportation substitution is a fact that is happening. But overall, we are not seeing a significant credit demand coming from the private sector, and we don't expect this to happen anytime soon because uncertainties and investment plans are not there. Yeah. So this is the situation. We are kind of standstill, if I may say in that way, waiting till, we have maybe a vaccine, maybe a efficient treatment for the disease, and the economy, let's call, open up again, not a new normal, the old normal, I would say, not the new normal, or the old normal, coming back to a situation in which probably, and this is a question that Larry already addressed when he and Mr. Kukies was saying that they support the government having a expansionary fiscal policy, somehow to substitute the surplus the private sector is having and is going to have for a while. How the economy recovers is going to depend very much on this. So that's the situation when we look from the bank, different periods, and now we stand still with the deposit still growing significantly.
José Antonio, thank you. I'm going to go back to Larry, if I might, and then I'm going to come back to you too, because there were 2 questions that hanging. One is there've been a bunch of questions as everyone was speaking that I want to feed to some of you, and we left hanging the question of inequality within countries. And I think, José Antonio, that's going to fall to banks like yours to think about it. I'm going to go to Larry first, though, if I might. Larry, one question. You heard your colleagues talk about kind of greater integration and coordinated response within the European Union. Can you tell us a little bit about how you see the map of the world changed by 2020, i.e. what you think about transatlantic relationship, US-China, Latin America? How do you see things being changed by what's unfolding this year? Oh, 1 second, Larry. For some reason, I can't hear you. Hold on. Now I can hear you.
How's that?
Yeah, gotcha.
James, I like to take the big view to start with. When people look back from 2100 at this moment, they're going to see the rise of Asia centered on China as being an event at least as important as the way we see the Industrial Revolution. And on the evidence so far, this is going to have been an accelerant of it. Whatever China's errors, and I think they were egregious at the early stage in failing to control this, it has to be recognized that Asian societies have dealt with this in a far more effective way than have European or North America or societies or the United States. I could not have conceived 2 years ago that there would be a global pandemic where Pakistan would outperform the United States by a factor of 5 or 10 to 1 in terms of effectiveness in implementing public health measures. And so I think right now, this is the test of the West. And I'm not sure how well the West is faring. And that's the huge story in terms of the question you asked about remaking the global map. I think it remains to be seen what the impact will be in the more traditional way of thinking, which would be emerging markets and industrial countries, and will emerging markets continue to emerge, and how serious will their debt problems be? And there too, I've got grievous concerns. I think that Agustín spoke powerfully and, in my view, entirely correctly about the extreme boldness and speed with which central banks stepped up to the occasion. I suspect he will agree with me when I say that the domestic central bank responses have been at a 2 or 3 standard deviation level of boldness, but that the international efforts have to date been timid, tepid, and transient. And in that context, that's going to widen the global inequality. We haven't, if you think about the agenda after 2009, all kinds of expansion of central bank swap lines, commitments to maintain open markets, big step-ups in trade finance, major augmentations of the capacity of the international financial institutions, allocations of new special drawing rights to maintain global liquidity, a compact for growth, emphasizing cooperative growth because the growth of one benefits the growth of all. That was the right package for then. This is a different crisis. The package probably has some different elements, but the boldness we saw then is the boldness that is required now. And it is what, for the most part, we saw, at least in the early stage, in response to the crisis, and are still seeing from the central banks. But we're not seeing it at the cross-border global level. And that's the other aspect of the international situation that has to be a source of great concern.
Agustín, I suspect you agree with the analysis of that. What do you think can be done about it?
Well, first of all, I think that the central banks established a very high bar in terms of what Larry said, that mostly domestic, but also some aspects of international response was very, very quick. I mean, if you compare the increase in the balance sheet of the central bank's proportional increase after the GFC and compared to this, it took, in some cases, 2 years to get where we are with what central banks did this time around in 3 months. I think that the response, for example, in the swap lines by the Fed was extremely opportune, and it quelled a major problem in US dollar funding. That in the absence of those swap lines, we would have had a major problem. I think reforms and I would say to speed up the response of institutions like the fund, like the World Bank, and so on. I mean, it's being worked out. As a matter of fact, next week we will have the fall meetings of the fund and the World Bank, and I'm sure that these issues will be addressed. I certainly think that far more needs to be done, and I hope that the political will is there to move this agenda to move this agenda forward. I mean, I think it's of the essence.
Yeah, I'm going to, while you've been speaking, there have been a raft of questions coming through. I think if you were going to try and thread a line through them, what you see is people's concern about imbalances, the next set of consequences. And so if I might, I'm just going to fire them at you, different people, different questions. Jose Antonio, I'm going to send the first one to you. Vicente Fernandez asked the question, at what time is the stability of the banking system compromised in a situation of structural low negative interest rates, large payment holidays, and increases in defaults and higher volatility?
As I said before, my reading right now is that we are kind of a standstill situation where when you look at the numbers, we are not seeing at this stage still the increase in arrears, NPL, all these things. When eventually this may happen, I think likely it's going to happen once the unemployment, the different schemes to protect incomes from the government disappear. That probably is very likely depending on the disease, but let's assume that is in mid-2021. We're going to see, depending on the fiscal policy, and the fiscal policy is going to play a key role here, up to what point the fiscal policy is protecting incomes, helping in different ways, particularly the SMEs and business and all these things, once the economy starts to recover. But I do expect, generally speaking, that the increase on unpaid loans will start to show up mid-2021. So this is, in some sense, this is not like, this is the origin is a disease, is different, but the translation into the banking system of what the market expects today is a very traditional one. It's a credit crisis just because the incomes or the P&L of the companies and the incomes of the individuals were hurt for a crisis, economic crisis, which the origin was a disease. So mid-2021 onwards, we're going to see what happens. What is my reading today? My reading today is the banking system has a significant, much higher stock of capital than the one we had before 2008. So the starting point from the stock point of view is very good. Okay, what about the flow? What worries me is the flow, because you pay the bad debts with the stock of capital, but once you start to destroy the capital, the confidence starts to go away. So the ideal world is in the ones in which you pay the bad debts with the flow of new business, yeah? And the capacity to generate capital, and this goes to the to the question, at least in Europe, in the European banking system, also somehow in the UK, in the US, has been damaged by the low, very low negative interest rates. And this put pressure on the capacity to generate pre-provision profit on the banking system. So this is the situation. So only institutions with a significant capital base, efficiency also plays a role, and with the diversification of different sources of revenues can offset potential spike in bad loans that is going to come in the aftermath of the crisis. Yeah, so this is my reading. Yeah.
Antonio, thank you. Your Kukies, if I might, also a question about imbalances, but a different kind. There's a question about the debt to GDP ratio in Germany and debt to GDP ratios in other European countries, i.e. low in Germany, but if you look in countries like Spain and Italy, that same ratio is different. What worry is there within the European Union about the impact of the crisis on financial imbalances within countries?
Well, of course, I think the logic is that of course, the market pressure at the moment is light because of the coherent response, all of the issues around redenomination risk, concerns about Europe acting in a coherent way have been overcome. So I think the fact that everyone can respond in a fiscally expansionary way at the moment is something positive. But of course, I mean, as we discussed yesterday, there are still differences in views between when do we need to go back to normal. And I think, as always, the balance has to be struck that at some point, and of course, very wary of the premature declaration of victory statement. But of course, the return to normal at some point will have to happen because of this divergence in debt to GDP level between member states in the European Union and the still strong fiscal rules at the individual member state level. So I think what we're seeing right now is something that is required as a response to the crisis, but needs to be addressed, of course, in a much more coherent way after that. I think if we go to a more coherent and integrative fiscal approach at the European level, the flip side of that, in a certain way, is of course that you can't have a coherent EU-level fiscal policy, but everyone asks for exemptions and idiosyncrasies at the national level with respect to the European fiscal policy, the Stability and Growth Pact, and all of the rules that we have. And also, I think, in addition to that, I think it's extremely valuable what was just said about the European banking system. I think that's the other huge macro theme that we have to overcome, which is a huge competitive disadvantage that Europe has relative to the US and Asia. We have a massively fragmented, ring-fenced, nationalistic banking system in the European Union. We have the promise from the big picture Lisbon Treaty of internal markets for goods and services. I think we have decent internal markets for goods. We have poor internal markets for services and very poor internal markets for financial services, and that is sort of a corollary of the things that José Antonio just said about the lack of ability to build scalable cross-border business models in the banking system in the EU. And when the US reformed its banking system in the 90s and became much more flexible on reducing restrictions to cross-border intrastate and interstate banking, it actually embarked on a faster growth path, I believe. So I think that's something that we can learn from.
Well, thank you for that. Not only for that observation, but also for the mind reading. There were a number of questions who were asking exactly that. How can you articulate a vision for a different kind of financial services market within the European Union? Larry, I'm struck by the fact that, or I'm aware of the fact that we've talked a fair bit about the US, about the European Union, touched on Asia, but not on Latin America and the economies and systems there. I just wondered, from your perspective, how you see the impact of this year on the economy and financial system there.
think it remains, it very much remains to be seen. I think one has to look across Latin America with very considerable concern about the resurrection of populism. If you think about Mexico, Brazil, and Argentina taken together, you're talking about a fair part of Latin America. And in all three of those countries, there are certainly problematic populist projections to be had. And it doesn't seem as if COVID is being dealt with in a very effective way. So I guess I'm struck by the similarity of the issues facing all of the Americas and the grounds for concern being similar. And none of us know what's going to happen in the US election, but the prospect of a change away from populism seemed quite good. I wish I saw more indications of trends of the same kind in other parts of Latin America.
Well, can I ask you
other parts of the Americas?
Can I ask you about that? This may be an unfair question on two counts. No one knows the outcome on November the 3rd. And more pointedly, you may be part of the outcome if President Biden, if Vice President Biden becomes president in January. Could you tell us, if that is the case, what should we expect to be changes in the way in which the United States conducts itself? And I suppose it links back to the third point that you made right at the opening, addressing questions of inequality in the system.
I would think that a new US administration would immediately strike a very different tone of civility and respect vis-a-vis all of the countries with whom the United States has been traditionally allied. Mm-hmm. That would mean speaking with respect. That would mean listening as well as speaking. That would mean resurrecting the idea of international community as an important organizing concept in the United States' global relations. That would mean understanding the need to value relationships with one's friends more than relationships with one's adversaries. That would mean participating in international institutions, whether it's and agreements, whether it's the Paris Agreement, the WHO, or the WTO. And I think that would be a hugely beneficial change in tone. I believe that to take a set of events about which, as you'd understand, I would have somewhat mixed feelings. I am very struck by how different the United States felt in the fall of 1980 and the fall of 1981. Rightly or wrongly, the United States felt ungovernable, mired in pessimism, consumed with internal conflict, and lacking in the ability to impose its will or get things done. A repudiation election that brought about a major transition in not just the executive, but the legislative branch, a change in the nature of the rhetoric and the tone. And the world felt very, very different a year later. Not all the, I'm a Democrat, not all the directions of change were to my liking, but that was probably the moment when it was brought home to me most clearly that, to use a phrase President Obama made famous, elections have consequences. And I think there's the possibility of that kind of change in the global tone emanating from the United States. I also think it is possible, and I don't want to be Pollyanna and I don't want to exaggerate, that the natural forces that operate independent of policy changes will see vaccines develop and start to be spread in the next 9 months. And in that context, a new administration, in addition to whatever it accomplishes, is likely to benefit from some tailwinds.
Right.
And we all know that in politics, as in many other human endeavors, it's great to be skillful and even better to be lucky. And so I think there is the possibility of a more favorable dynamic starting to assert itself. I think what that will require, and this is something that I say whenever I talk about the next period in the United States, there is a tendency on the part of some, particularly on the progressive side, to be so consumed by their antipathy for so much that the current administration has done, that they lose sight of the fact that even if the doctor has been incompetent, the patient actually does have some fairly serious illnesses. And that replacing the doctor without conceiving some important cures and changing some important habits will not be sufficient. And that, I think, is also crucial if the challenges of the moment are to be met.
Larry, thank you. I'm going to finish. We've got 2 minutes left, and I just want to ask each of you the same thing, which is, it's rare if you're someone like me, many of us on this call, that you get a group like you together, and all of us have been changed by the way in which we live and work in this last 6 months. And I would just like to ask each of you, which is the one change that you hope that we'll hold on to, or you will hold on to, in the way in which you live and work? And I'm going to start unfairly with José Antonio. Is there something that you do differently now that you hope you'll continue to do differently into the future?
Probably we suddenly discovered that traveling so much, particularly for me that I was traveling 100 days a year, I can save some traveling. Yeah? So I will keep some of this going forward, probably. Yeah. So probably is the thing. Suddenly my agenda is better off. Yeah. Maybe because less people come to see me, or maybe because I do travel less. Yeah.
Okay. Well, the finding of time is no small thing. Agustín?
Just to dare to change, and it's not only traveling, but also the way we work. I think technology has been surprisingly productive and enhancing. We're doing things today that we wouldn't have dared to do a year ago.
Yes.
I mean, if they ask me, the BIS has a very large banking operation. We moved it with no person in our building in a matter of days. If they can't ask me, are you prepared to do that? But my technicians here have proven me wrong, and I'm very happy about that. So dare to embrace innovation.
Okay, well, I think that's right. We all have, and learned that we can be much more tech reliant than we thought. Your Kukies, your change? Oh, I can't hear you, Jörg, one sec.
I would say the massive digitization of daily habits, I think, is something we basically brought forward, a trend that's existed for years and decades, and accelerating that and keeping the pace on that, I think, would be a very, very positive development.
Thank you very much. And Larry, yours?
You can get used to a lot. Keep going, persevere, manage, and still be able to smile. And that, I think, is what I have learned, and much of the reason for it is the technological things that my colleagues have on this panel has pointed out. If I could be permitted an additional word, James, I would thank you for the superb questions that you asked. I would thank my colleagues at Santander for having brought us all together, and at the risk of some collective immodesty, I would suggest that the kind of tone of this set of reflections on controversial issues is something that, if it could be practiced more widely, would contribute very much to better functioning societies everywhere. And I'm greatly flattered to have been included with this distinguished group.
Larry, that is very generous of you. And I know that everyone, certainly, I feel lucky to have been part of listening on a conversation from you, from your Kukies, from José Antonio Álvarez, from Agustín Carstens. It's quite a gang, and it's been a pleasure to be a part of it. Happily, Santander is bringing together in the next session of this Santander International Banking Conference, same time next week, a group to think about payments, digital currencies, and technology. Please do join us. It's also a formidable group. Dan Schulman from PayPal, Frank D'Souza from Cognizant. I think we're going to have a lot to learn there too. So please do join us. There's some wonderful things about technology, not least that we can all get together like this. The one thing that we can't do is express our appreciation with applause. We can only smile and wave, but I would suggest that we do that. It's been very good to have you. So thank you. I really appreciate it, and look forward to seeing everyone at next week's conversation.
Thanks.
Thank you.
And be lucky.
Be lucky.